Welcome to another REG walkthrough video. I'm Logan, and in today's video, we're going to be going over charitable contributions as itemized deductions. And we're going to be learning it the SuperfastCPA way, which is diving straight into questions. If this is the first thing you're seeing from us and you want to learn more about our strategies, make sure you go to SuperfastCPA.com and watch our free 1-hour webinar training, where we teach the 6 key ingredients to passing the CPA exam. Again, it's only 1 hour long, it's free, and it will save you so much struggling with the CPA exams, I promise. The link will be in the description, and it looks like this. And also, make sure you check out our Superfast CPA app, where we have 5-question mini quizzes, audio notes, and review notes that you can constantly access on your phone throughout the day to be continually studying. With all that said, let's dive straight into the questions. Okay, here's question 1. Mark, a married taxpayer filing jointly, has an adjusted gross income of $50,000 for the year. He made a single cash donation of $40,000 to a qualified nonprofit charity that works to provide education to underprivileged children. Assuming all contributions are substantiated, what is the maximum amount Mark can claim as a charitable contribution deduction for this year, considering the AGI limitations for cash donations to public charities? Unlike in other videos, most of these questions we're going to be going straight to the answer because each question is going to be teaching a different part of charitable contributions. So let's go straight into the answer so we can start learning how cash contributions work as itemized deductions. Okay, here's the answer, $30,000. Taxpayers can deduct cash contributions up to a limit of 60% of their AGI to qualified charitable organizations. This can include cash or check, of course, and also credit card charges as long as the charge is in the correct year. The charge does not have to be paid off in the same year to qualify for a contribution deduction. So you could pay money to a charity with a credit card, and you don't even have to pay off the credit card in the given year. Therefore, Mark can claim a deduction of $30,000, which is 60% of his $50,000 AGI, for his cash donation, and he may carry over the excess amount of $10,000 for the subsequent 5 years, subject to the IRS's carryover rules and limitations. And basically, contribution carryovers are used on a first in, first out basis each year. Qualifying organizations typically include 501c3 nonprofit organizations and religious organizations. Those are the most common that you're going to see. Gifts given to people or contributions to political campaigns do not fall in these categories and are not deductible. So you can't just give $10,000 to a friend and count it as a charitable contribution. There are rules for gifts, but again, most of that is in TCP now, so we're not going to deal with that in REG. As a general rule, all charitable contributions must have documentation of the contribution and amounts. And that's kind of what this substantiation was talking about there. There has to be some evidence that you paid for something, like a receipt or things like that. If the contribution was not in the current year or there is not documentation, then no deduction may be taken. So you can't just randomly say, I gave $1,000 to this charity, but if you don't have the documentation, then you can't take the deduction. All right, so we learned a lot. Specifically, cash donations have a 60% AGI limitation. Let's go to the next question. Okay, here's question 2. Samantha, a single taxpayer, has an adjusted gross income of $80,000 for the tax year. She donated a piece of antique furniture to a qualified local museum. The furniture, which she originally purchased for $5,000 5 years ago, has a current fair market value of $20,000. The museum has provided Samantha with proper documentation acknowledging the donation and stating that the furniture will be used as part of their permanent collection, which is open to the public. What is the maximum amount Samantha can claim as a charitable contribution deduction for this tax year? So we haven't learned anything about property contributions. We've only learned about cash contributions so far. So let's go ahead and go straight into the answer to see how these work. Okay, here's the answer. $20,000, which that looks like that's the fair market value. When donating personal property other than cash for a qualified organization, the deduction is generally equal to the property's fair market value at the time of the donation, provided it has been held for more than 1 year, thus qualifying as a long-term capital gain property. And we'll see why that matters in the next question. Since the antique furniture is worth $20,000, and assuming Samantha has not exceeded the $30,000 AGI limitation for donations of appreciated assets to public charities, she can claim the full fair market value as a deduction. If she had other contributions that approached or exceeded the 30% AGI limit, then she would need to adjust the deduction accordingly and might have to carry over the excess to future years. So in this case, she's under the 30% limit of AGI for property donated. So she can take the full $20,000 deduction. And again, specifically for personal property donated that falls under this 30% AGI limitation rule, you use the fair market value. All right, let's go to the next question to learn a little bit more. Okay, here's question 3. Laura, a single taxpayer, operates a small craft business and has an adjusted gross income of $40,000 for the year. She donated handmade crafts from her inventory to a qualified nonprofit organization that sells the items to raise funds for its activities. The crafts had cost Laura $2,000 to make and had a fair market value of $5,000 at the time of donation. What is the maximum amount Laura can claim as a charitable contribution deduction for these items? Okay, so these are items from her business, and we're going to learn if this is different than the above situation where it was personal property, like the furniture that was donated. So let's go ahead and go into the answer to see if there's anything different. Okay, here's the answer. So $2,000, which is the cost, not the fair market value. So this is a different situation. When donating property that would result in a short-term gain or ordinary income if sold, such as short-term assets, inventory, or property held mainly for sale to customers, so in this case, Laura's Crafts, the deduction is generally limited to the lesser of the taxpayer's cost basis in the property or the fair market value. So in this case, because this is property that was either short-term or was mainly from a business, like inventory or stuff that you sell, this is treated a little bit differently. In these situations, additionally, there is a 50% AGI limitation that applies for ordinary income property. In this scenario, her deduction does not exceed these thresholds since her cost basis is well below the 50% of AGI. If Laura had other contributions that approached or exceeded the 50% AGI limit, then she would need to adjust the deduction accordingly. So far, there's 3 different percentage limitations when it comes to charitable contributions. There's the 60% cash contribution, again, 60% of AGI. There's now the 50% AGI limitation for ordinary income property, which is stuff that's more like short-term gains or inventory or things like that from a personal business. And then there's finally the 30% AGI limitation for personal property or long-term property. So again, there's 3 different percentages, and we've learned the 3 so far. Let's go ahead and see how these interact together in the next question. Okay, here's question 4. Patricia, a single taxpayer, has an adjusted gross income of $50,000 for the tax year. During the year, she made the following charitable contributions: a cash donation of $20,000 to a qualified local food bank, office supplies valued at $8,000 with a cost basis of $5,000 to a qualified public school. These supplies were held as inventory for her business, and shares of stock valued at $25,000 to a qualified environmental organization which she purchased for $10,000 2 years ago. So, assuming all of these contributions are substantiated, again, they have proper documentation and everything, and given the IRS rules and AGI limitations for charitable contributions, what is the maximum deduction Patricia can claim on her itemized deductions for this year? Okay, we've learned about all 3 of these: the cash donation, the ordinary income donation, ordinary income property donation, excuse me, and the long-term personal property limitation. So we've learned all 3 of these different things. Take a second, pause the video, see if you can figure out how this would work. But with that said, it is an interesting calculation that you probably wouldn't think of. So if you want, go ahead and pause the video to see if you could figure it out. But we're going to go straight into the answer because it's fairly involved. Okay, $25,000. So let's go into this complicated calculation. When a taxpayer has multiple different types of donations, you apply the limitations in this order. First, cash donation of 60%, then ordinary income property with the 50% limit, and finally, long-term capital gain property with the 30% limit. So you apply it in that order. So let's go through it. The cash donation is subject to the 60% AGI limit. Her AGI is 50,000, so 60% of that is 30,000. Her cash donation of 20,000 does not exceed this limit, so the full amount is deductible. So we start with that $20,000. The office supplies are ordinary income property. First, you calculate the 50% AGI limit, which in this case would be $25,000. Then you subtract the cash donation already allowed, which is the $20,000. So that leaves a $5,000 limit. So they interact in an interesting way. The 50% AGI limit is affected by the 60% AGI limit if there are cash contributions. So the 50% AGI limit is now lowered to $5,000. Now, since the cost basis of the office supplies is lower than the fair market value, then she uses $5,000 as the amount that she would have deducted, And since that's the same as this limit, she can deduct the full $5,000 for the office supplies. Now, this is where it gets even more tricky. The long-term capital gain property, which was the shares of stock, is subject to a 30% AGI limitation, which would be $15,000 for Patricia. However, once you reach long-term capital gain property after doing the other two steps, the AGI limitation used is the lesser of the 30% AGI limit, which in this case is $15,000, or the 50% AGI limit remaining after subtracting the allowed cash contribution and the allowed ordinary income property contribution. So remember, the 50% limit was originally $25,000. We subtracted the $20,000 cash contribution from the 60% limit, and we subtracted the $5,000 of ordinary income contribution. So actually, the 50% AGI limit is now zero once we get to the long-term capital gain property. Since there is no remaining AGI limitation space for this contribution because the cash and the ordinary income property contributions have already used up the 50% AGI limit, there is no deduction available for the long-term capital gain property this year, and it may be carried over to subsequent years. So in total, she can take the $25,000 charitable contribution deduction for the cash and then the ordinary income property. So again, this is a complicated calculation. It's not something that you are likely to see often, so hopefully you won't have to deal with this, but it is important to know that there is that order and the limitations affect each other. So let's go to the last question just to finish up. Okay, here's question 5. Alexander, a single taxpayer with an adjusted gross income of $60,000, engages in the following charitable activities during the year. He donates a used personal computer to a religious organization he regularly attends. The computer was originally purchased for $1,500 2 years ago and has a current fair market value of $700. Alexander purchases movie tickets for all his family and friends for $500 to attend a charity movie night organized by a qualified nonprofit organization. The fair market value of the entertainment provided at the movie night was $200. He spends 10 hours per month volunteering at a local food bank. His professional services as a consultant are valued at $100 per hour. Which of the following correctly reflects Alexander's total potential charitable contribution deductions for the year? Okay, a few more things thrown in here. So just to finish out, let's go ahead and look at the answer to see what else we need to learn. Okay, the answer is $1,000. The donation of personal property like a computer to a religious organization is generally deductible at the item's fair market value at the time of the donation, provided the taxpayer itemizes deductions and the organization is qualified. Since the computer's fair market value is $700, this is the amount Alexander can deduct, not the adjusted basis or the original purchase price. So again, as a general rule, for personal property that you've had for a while that's not ordinary income property, it's the fair market value that's used. When purchasing tickets to a charity event, the deductible portion is the amount exceeding the fair market value of the benefits received. Therefore, Alexander can deduct $300, $500 ticket price less the $200 fair market value of the entertainment. The IRS does not allow deductions for the value of time or services provided to a charity. Therefore, even though Alexander's professional rate is $100 per hour, the 10 hours per month he volunteers at the food bank does not count towards his charitable contribution deductions. If Alexander had some out-of-pocket expenses associated with this service, he may be able to deduct these expenses, even including expenses traveling to and from the charity. So if you're spending your own money in pursuing providing services to a charity, you may be able to deduct those expenses, maybe even driving to and from. But providing that service to a charity is not something that's deductible. Thus, Alexander can claim the total $1,000 charitable contribution from the fair market value here and the deductible portion of these tickets. Okay, so we learned a lot about charitable contributions as itemized deductions in this video. Let's go ahead and finish out by doing one more part of the Superfast CPA strategy, which is something called pillar topics. Now, the idea behind pillar topics is essentially as you're going through the questions and after you've gone through the questions, you will notice the things that are obviously important and that you were supposed to learn based off of your review course. These are the things that you saw 3 or 4 times throughout the questions, making it obvious that these were the things that you needed to know. So let's go ahead and look at the pillar topics. So cash contributions are limited to 60% of AGI. Ordinary income property donations, such as like inventory, items for sale, or short-term things, are limited to 50% of AGI, and property donations that are long-term are limited to 30% of AGI. And if all 3 of these occur in 1 year, here's the order again. First is the cash contribution 60% AGI limit, then the 50% AGI limit less the allowed amount from the 60% AGI limit, and then finally, the lesser of what remains from the 50% AGI limit after deducting the cash and the ordinary income allowed amounts, or the 30% of AGI limit is what's taken for long-term capital gain items. So the lesser of that. And then whatever amounts are left over after that, and then whatever amounts are over the limits for the year are carried forward 5 years to be used. Finally, services are not deductible. And remember, expenses incurred while performing those services might be deductible. And gifts to people and donations to political campaigns are not deductible. Okay, so those are some of the pillar topics that I pulled out from this video. Maybe you thought of some other things, or maybe you want to add more detail to this. Definitely do that for yourself. With all that said, that's the end of the video. Thanks for watching. Be sure to go to SuperfastCPA.com and watch that free 1-hour webinar. We teach the 6 key ingredients to passing the CPA exam. Also, make sure to check out our Superfast CPA app, where we have 5-question mini quizzes that you can take throughout the day to continually be learning from questions. I hope this was helpful, and I'll see you in the next video.